Hi, I'm Ashley Gardyne, Fisher Fund's Chief Investment Officer. I wanted to provide just a quick update on the market impact of the war in Iran and what it means for investors. Now, while this is clearly a major and also a tragic event for those in the region, the initial impact on financial markets has actually been quite muted. Share markets were only down modestly in the days after the event, and oil prices were up about 10%. And this was essentially because the early view was that this would be a short-lived campaign. But as we've seen recently, the war has stretched on to a second week. The roller coaster has picked up a little bit in financial markets and things have become more turbulent. There was no quick pause like we saw in Venezuela, there was no regime change, and oil shipments out of the region have essentially ground to a halt. Now, as a result, the oil price jumped briefly over $100 a barrel, which was a really significant move, and the market started to worry about the prolonged impact of high oil prices on inflation. But still, overall, the market is only down about 3 or 4% from its highs. And this is partly because President Trump has been pretty clear in the last few days that the war may be close to an end. Now, importantly as well, moves like this aren't unusual when unexpected events occur. We saw similar dynamics in Ukraine in 2022. The oil price spiked pretty suddenly to $120 a barrel. It had an impact on financial markets, but ultimately oil markets rebalanced and came back down, and global share markets are now 60% higher than they were in 2022. So markets are always responding to lots of different things at once. It's not just the geopolitical situation, it's economic data, it's interest rates, it's central bank decisions, it's innovation, business sentiment. So geopolitics is just one piece of the pie that markets are weighing. And if you look at previous conflicts since 1990, when we had the first Gulf War, global share markets typically fall 3 to 5% initially, but interestingly, markets have generally rebounded and pushed higher within just a few months. So I'd say the key message here for investors is that while events like this can be unsettling, they are pretty common. We've seen them many times before. And if you're feeling nervous, it's a good time to speak to one of your advisors, stay calm and focus on the long-term picture.